Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro impulsive scenario where we're looking for a 5-wave structure to the downside, and after wave 5 is in, we're then looking for this 5-wave structure to be a wave 1 or a wave A, for then a 3-wave correction and continuation to the downside. However, in this scenario, wave 4 retraced to the golden pocket, which is incredibly rare, and usually I simply use it as an invalidation because the most common target for a wave 4 is a 0.236 to the 0.5, which clearly has been passed, invalidating for me a wave 4. You could put this wave 3 over here to a pivot on the left and then look at wave 4 as an A, B, C, but the problem with this particular count, so a flat count in wave 4, is that this wave C is over double the size as wave A and B together, which invalidates a wave C to the upside. So this is not possible as well. So therefore this scenario in general has very low probabilities. If we then look at the bullish scenario, we're looking at this to be the low and then a 5-wave structure to the upside in a wave 1, 3-wave zigzag to the downside in wave 2, where wave C did retrace to the common target area for wave C, which is between the 1 and the 1.236 trend-based fib extension of the pool that I just did from the high to the low to the high, and then a wave A, B and a wave C. You can see most common target area for a wave C very nicely respected indeed, for then the low of a wave 2. Now after this wave 2, you then want to see continuation to the upside, and the problem here is that price now retraced to the 886, not for the first time, for the second time. Now once the 886 is hit, probabilities increase for this to be a wave B or a wave X, meaning any move towards the upside has a higher probability of being a wave C or a wave Y, which therefore increases probabilities of eventually lower prices to come, unless we're gonna look for a triangle scenario, and that is then also this scenario over here. So in a triangle scenario, we're looking for a wave A to the downside, currently working on a wave B. Most common target for B is between the golden pocket and the 786, taken from the high to the low of A, which is between 35.3k and 35.6k, for then eventually a wave C, D and E. 3-wave C, D and eventually E. And this pattern could evolve throughout the whole weekend, so it can then be a very rangy weekend as well. Now we do have news coming up, but more about that in a second. This triangle would then fit in a W flat, then you have a zigzag structure in a wave X, so we have a W, X, and then wave Y is a triangle scenario. So that is the way this triangle fits in the overall structure of this bigger range. If you then finally look at the most bearish scenario, then in this particular scenario we have a 1-2 and then another 1-2 looking for continuation to the downside. This wave 2 over here retraced to the 0.382, as you can see, from the high to the low of 1, which is a less common target for a wave 2 and more common for a wave B. So that is something we have to keep in mind. Second wave 2 to the golden pocket, all good, all nice. No bearish CVD divergences here though, and also no bearish CVD divergences here, which is something that I do like to see if we get a buildup of double 1-2s, as double 1-2s are very bearish, because then you expect a very big move to the downside in a bigger wave 3. So preferably you see proof of absorption by having CVD divergences, but that's not what we have at the moment between these two highs over here. Now in this scenario, the second wave 2 has to be a zigzag to the upside, and if we go to the 5-minute, you can see the first wave 2 over here, zigzag, all good, all fine, that's possible. And then the second wave 2 here has to be a zigzag as well, and then an A, B and a wave C to the upside, because this has to be the end of your corrective structure. Take a fib from the low to the high to the low, and you can see that the 1.618 has been hit over here, and the 1.618 is a target for a wave C. Not as common as the most common target area between the 1 and the 1.236, but it is a target nonetheless. So if price does fall to the downside over here and takes the double bottom, probabilities increase of a potential 1-2 and continuation to the bottom for lower prices, as we also have so much liquidity below us over here. We have a double bottom over here, Double bottom over here, another double bottom, right? Like there's a lot of liquidity in this range, so it won't be a bad idea to move to the downside. In a double 1-2, however, you expect a wave 3 to be very impulsive and very strong for much lower prices to come, so that should be quite interesting. And if we look at the news, then we do have news today, 1:30 p.m. Central European time and also 3 p.m. Central European time. We have news, so that can increase the volatility of today, so make sure that you trade safe around these hours. If we then look at the CVD divergences, then at the moment, very locally, we do have bullish CVD divergences over here, as this is still a higher low in price, lower low on the CVD, and also locally over here on the 3-minute, but that one already played out. If I show you this on the chart, then you can see over here, we actually have a higher low in price, but on my AGGR chart, interestingly, the low got wicked. I actually didn't notice this beforehand. So we don't have bullish CVD divergences on the AGGR chart, because if I put my cursor on the candle low here, and you look at the right, then this red candle wicked the low of the green candle, interestingly, which would invalidate the whole bullish scenario over here, the whole bullish CVD. So that is quite interesting. So there's no bullish CVD divergences locally. We do have the small ones, but this already played out. Higher low in price. We had a lower low on yellow, but that one already finished. And yeah, that of course then increases potential probabilities to the downside. If we look at the probabilities of the different scenarios here locally, then reaching the 886 for the second time over here, 886 taken from the low to the high. This was touch number 1, touch number 2, preferably with an 886. Once you touch it, you move, right? You move away from the 886. The moment you come back, probabilities really increase for price to continue to the downside and take this low. And that is then also the highest probability from an Elliott Wave perspective, where then I'd be looking for the support area that I have over here as well, sitting between 33.8k and 33.9k, which is just below the double bottom as well. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.